Good afternoon, esteemed traders and investors. Today is Monday, December 8th. I present to your attention another market review for Forex. As always, I'm glad to be here with you today. So, we have a new trading week ahead. Let's take a look at the news. There are no important news releases regarding the dollar today. Tomorrow morning at 6:30, the interest rate decision on the Australian dollar will be announced. Congratulations to those who are holding grids on it. Basically, the major news for tomorrow ends there. On Wednesday, we have inflation data for the dollar since the middle of the month is already near. This happens every month. There's also the interest rate decision on the Canadian dollar, and very importantly, the FOMC with its rate decision. And all of this, my friends, will happen on Wednesday. So Wednesday is the most news-packed day. On Thursday, we have the interest rate decision on the Swiss franc. You see there are zero figures here. I think Elvira Nabulina also sees these zero figures and doesn't understand why this is happening. Oh, and also the initial jobless claims. Overall, we're in for a pretty interesting trading week in terms of news. Let's take a look at what we can trade on the charts. Let's go. So now let's start with the gold quotes and the weekly time frame. Unfortunately, that is indeed the case. And on the weekly time frame, my friends, let's refer to it as a weekly pause in gold. In other words, what we are observing here is a small black spinning top, as it is commonly called by those who trade Japanese candlesticks, which is a particular type of candlestick pattern that suggests the bulls are feeling a bit tired or perhaps just pausing for a moment. On the other hand, this week we have a series of important news events coming out, but only on Wednesday. So you could say that gold has essentially paused its remarkable hypergrowth just ahead of some very important news this week. My friends, we have the FOMC, the Federal Open Market Committee, and next week, non-farm payrolls as well. That's why it makes sense that gold has slowed down. It slowed down noticeably at the end of last week, giving a strong short impulse. And by the way, leaving a small area right here at the highs. That's it. And for now, it's staying in a flat range. I don't see any opportunity here yet to make some money with clear risks. So I would take a wait-and-see strategy with this particular instrument, considering the current market conditions. The euro-dollar pair. On the weekly time frame, it's showing a bullish bar, the second one already from the lows. We have a clearly defined bullish trend. Today, I already shared a trading idea for going long on this instrument after the bullish breakout that happened today. During the Asian session, I'm showing the 15-minute time frame. On the 4-hour chart, there's a kind of flat movement here, nothing interesting for now, but the 15-minute chart broke down today during the Asian session. Moreover, they formed a double top between yesterday, between Friday and today without breaking it. Accordingly, I expect a breakout to the upside. With risks of about 200 points, you can expect 250 to 350 in return.
Looking for real trading advantages? Forex offers the lowest spreads and commissions. On major currency pairs, our conditions are better. Lower spreads and only $5 commission instead of $7. That's real savings for every trader. And now, let's get back to the market review.
The British pound US dollar pair on the weekly time frame is currently also indeed showing impressive bullish impulses. We've been growing for 2 weeks in a row. There aren't any local consolidation zones. On the 4-hour chart, the pullbacks are also quite shallow. That's it. The only thing I would highlight, of course, is this zone right here. If, theoretically speaking, we were to drop down to this zone from here, then it would be possible to buy from there. But for now, at the present time, prices are quite high. So it's expensive to buy here and there's no clear reason to sell yet. So despite the growth, yes, there is growth and that's great. But for now, we're on pause here. As for the Australian dollar, the instrument is rising by leaps and bounds, completely mirroring the situation in both the euro dollar and the pound dollar. Because here, my friends, it's the US dollar that's in control. Two significant bullish impulses that have almost engulfed, let's see, August, September, October, November. So we kept trying to fall, and then in 2 weeks we shot up. This is a clear sign of weakness in the US dollar. So here I wouldn't even consider any serious short positions. That's it. And for buying, we don't have any pullback levels. The main one below hasn't been tested, so for now, we're skipping this instrument.
I also want to remind you that every Forex client automatically receives loss insurance. For every $1 of compensation, only $4 of your friend's investments are required. Just submit a request, and your losses will be recovered. Let's continue with the review.
Dollar Canadian. We've reached it as well. Let me remind you, it actually bounced off the zone of a massive short breakdown that happened at the very beginning of the year, gave two extremely strong weekly candles, and it just keeps moving down. That's it. Here, ahead of us, there's a very interesting area below. For those who think the dollar Canadian has already run out of steam falling, I have to disappoint you. What it left behind back in the frosty and chilly month of August of this year will, I think, be retested very soon, perhaps even sooner than we might expect. Therefore, after some number of pullback points, which might not even happen, I would only consider a decline into this zone. And then the second target is also this trident right here, which it actually left behind back in June. Now, dollar yen. Last week, the dollar yen dropped quite significantly and broke through several important highs here. On the weekly time frame, we had a clear bearish bar. By the way, the aggressor updated the lows here in one of the notable signal candles. Now, for the moment, it's rolling back up again, showing a bit of a retracement. The situation here is actually quite strange. Those who caught on from this inside bar, well done, there's room to hold. Buyers are now starting to appear on the F4 time frame. The first wave has passed, the second as well, and now the third is underway. On the 4s, for now, in my opinion, there's nothing interesting. That's it. The 15s were really starting to gradually break down, but they still didn't actually test the long break zone. For now, it's growing. For those who want to sell this instrument, the selling zone is a bit higher at the break that happened during the night from December 2nd to 3rd. Here you could try your luck with a short. That's it. But as long as these extremes haven't been broken yet, I really think it's better to wait. Yes, just wait until there's a breakout and then try to sell. That's it for now. Well, basically, everything here is simple.
With InstaForex, you can triple your profit. For every $4 of your friend's investments, you automatically get an extra $1 added to your profit, with no extra conditions.
So, as for oil is currently dropping for us. Overall, throughout the weeks have been characterized by very low volatility for us. For those traders who are playing or following this large, significant three-wave structure that originated from the bullish impulse back in October, you can still reasonably count on the potential for continued growth in the future. Today, of course, everything is dropping. So that's it. I don't see any clear breakdowns here. The last long breakdown was down here. It has already been tested several times. Basically, that's all. There's quite a bit of money accumulated up top here, and you can try to hunt for it if you want. Pullbacks to longer breakdowns can also be expected, in principle. By the way, someone built up a solid base here, and now they're skimming the cream off it. Well, that's it. I don't know what advice to give anyone here. The volatility is so-so. There's definitely some pretty serious chop going on out there. As for relying on some of those longer breakdowns, I can't really say exactly which ones here because the fresh breakdowns generally work better, like in this particular case. The ones that have already been tested 15 times aren't as good anymore. Well, it's not really ideal. So for now, I take a wait-and-see approach here. Bitcoin. Notice how it's moving extremely slowly and with a lot of caution today. It makes sense that the instrument is growing from here. Someone bought in at 80 and will sell at 100, making 20% without leverage. Why not?
We also have a great offer. Fund your account and get a 30% tradable bonus. Trade with additional capital and expand your opportunities with InstaForex.
As for the American stock market, the S&P 500 and Nasdaq are rising, everything looks bullish on the daily charts, and the weekly charts also clearly indicate continued growth. I wouldn't buy at such high prices here. The risks are significant. Although, if you can afford to set a stop for 2 weeks, why not go for a one-to-one gain? But honestly, it's not that great of an idea. Technically speaking, the financial instrument in question isn't actually rolling back. It falls rather slowly, but it rises quite sharply and doesn't even attempt to test any significant long breakouts. As for the dollar-franc pair, this week will definitely reveal a lot more about it. Why? Look, last week closed with a pin bar. This pin bar is in a bullish trend inside this inside bar. In theory, this setup is definitely pointing to a breakout. This could happen either on a weak franc, where the bet is, or on a strong US dollar, where the FOMC comes into play. So be careful here, but technically speaking, this is a bullish picture, an engulfing, a pullback, and now a third wave is forming. It should at the very least surpass the first wave and the nearest highs. I hope that's exactly how things will play out this week. That's all. Trade with InstaForex, subscribe to the channel, and stay tuned for new reviews.